How's it going out there? It's November 18th. I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down headlines and tell you what's really moving these markets. So it's been an interesting 2 weeks, right? Last week we had Pfizer and BioNTech report very, very positive data on its COVID vaccine. Market popped on this news because their vaccine showed a 90% efficacy rate. So it's effective, 90% effective, which is amazing. And to put that in perspective, the flu vaccine, which is distributed every single year, is around 40%, right? It's a lot of different strains every single year. So it's, but it's at 40%. This is 90%. And it puts in a class of the MMR vaccine, which is measles, mumps, rubella. And together, they're close to the 90% range as well. And if you look at measles, mumps vaccine, nobody goes out, right? Nobody's worried about catching that, right? So that's where you can look at where COVID's going to be a few years from now, not right away, right? A few years from now. Now, once this news was released, what happened? We saw the cyclical trade, which is cruises, airlines, hotels, oil, travel-related sites surge, right? Surge on this news, which should be pretty great news for you guys, because I've been pounding this table for at least 2 months. And as you guys know, I'm not someone that pats myself on the back ever. Okay, I cover my losers more than my winners. And I do that for a reason, because we all become better investors when we focus on our losers and how do we get better. So I'm not being arrogant in saying that, but I saw a little risk in these names. Given that most are still down more than 25% from their highs. A lot of these names did a great job cutting costs, extending their debt schedules, hunkering down during those lockdowns. Plus, if you look at the hotels, casino, cruise lines, I wasn't recommending just any one of them. I was recommending those with the best balance sheets. And a lot of those names are seeing huge bookings for 2021. What does that mean? It means people are dying to get out of their houses. They're dying to get out of their houses. We all know that. Everyone listening to this can identify this. Everyone in the world can identify with this. It's not easy. Staying home, not being able to travel ever, even see family members or business, it's not easy. Plus, with the vaccine coming out soon, right? 2 months ago, we had amazing data from Moderna and Pfizer. This was phase 2/phase 3 data that came out that was extremely positive. It just made sense to get into these stocks. I mean, the timing might have been a little difficult because, hey, COVID's not going to be cured right away. But, when we look at this, eventually we're going to find a way out of this. And now with the vaccine news from last week from Pfizer was great. It's awesome news. So if you're looking at the market as a whole, guys, even look at what stocks went up and the stay-at-home stocks. You're looking at large technology stocks. When you're looking at this market, you're not going to see a lot of money come out and go into treasuries, which we've seen a lot because they're yielding what, 0.9, 0.8, whatever it is today. I mean, accounting for inflation, you're going to make nothing, right? You're going to make a negative return. So what's going on in the stock market is what you're seeing is a rotation. It's the same amount of money that's in there, it's just being rotated into different areas. So the rotation was going to take place where, hey, a lot of money managers, and you saw that with 13Fs, they come out every quarter. They were just released a couple days ago. So you could look at, Tepper, Loeb, Buffett, all these guys. I believe it's over $100 million in management. They have to list everything that they own, that they increased, all those positions they decreased and closed. They have to, list all that stuff. And you saw that. You're seeing the rotation out of technology and to a lot of these names, which is really good news. Now it gets even better, right? Because earlier this week, we had Moderna come out with results from its COVID vaccine. That was a phase 3 trial as well. It showed a 94% effective rate, which is really the same as 90%, but it sounds better, right? 94%. The vaccine uses the same technology as Pfizer, which is called mRNA. It's just basically, not to bore you, it's a form of immunotherapy. They inject proteins into cells, and then the cells are able to attach to other cells. Because even when you get cancer, your immune system fights it and realizes it can't win and gives up, and that's how it spreads. So these forms of immune therapy, which mRNA is, it tells your immune system, hey, to keep fighting, and this one actually attaches itself and feeds off of it and creates even better. It's really amazing. I mean, you really got to look into it. It gets a little technical, but it's really cool. So these two companies are both had the same technology. But when it comes to logistics, there's a big difference because Pfizer's vaccine has to be kept at nearly minus 100 degrees Fahrenheit to remain effective. If you want to put that in perspective, that's about 20 degrees colder than extreme winter temperatures in the South Pole. Pretty crazy. When you look at Moderna's vaccine, it must also be shipped when it's frozen, but it can be stored in a refrigerator in transportation for up to 7 days, which is a significant difference. Now, with Pfizer, they have all logistics present. Everything's cool. But Moderna makes it a little bit easier. Now, there was a little back and forth on almost every media channel and big personalities in social media, if you guys are on your Twitters and Facebooks or whatever, since Moderna was 94% effective and Pfizer was just 90%. Again, both amazing rates. Unbelievable. And for the record, today, okay, taping this Wednesday, today, Pfizer reported safety data, which said that the new data confirms a 95% effective rate, just perfectly a little bit higher than Moderna. I get it. I understand. Anything over 85% is amazing. 90, 95% basically is telling you that the COVID virus is going to be gone pretty soon. And when I say soon, I mean years. I don't mean next year. I don't mean 2022. I mean probably by 2025, which is great news, which is awesome, right? Now, here's what you need to know. Both these vaccines, absolutely amazing. Considering the quickest we've ever brought a vaccine to market was mumps in the late 1960s, and that took 4 years. 4 years. These COVID vaccines were brought to the market in 9 months, which is incredible. I don't want to get political here. I'm not. People are going to get political. People are going to hate Trump no matter what and blame him for every single death in the United States from COVID, right? No matter who was president, that person was going to get blamed. That's the way it goes in politics. Everybody gets that. But the Operation Warp Speed, to have the largest pharmaceutical companies in the world working on this together, right? Hundreds of billions in government funding to fast track the operational hangups, not to fast track the data. Of course we don't want a vaccine that's not going to work or we're not too sure about. No, absolutely not. But there is a bottleneck in this process, and it takes a while to really get, the approvals and everything. But you could speed that up. Why? Because this is affecting the entire world. And bringing all these the largest pharmaceutical companies together, funding them, making this as easy as possible to do this, we were able to produce this in 9 months. Pretty incredible when you think about it. 9 months. That's going to save tens of thousands to hundreds of thousands of lives. And this is around the globe. This is just the U.S. Now, the government projects that Pfizer and Moderna are going to provide 40 million doses, enough for 20 million people, because you got to get 2 shots. I think they're about a month apart. And this is by the end of the year. And then well over 1 billion doses in 2021. Again, that's 500 million people. So in the next few months, we're going to have respawn workers, people working hospitals, the people who are over 70 that need it the most. They're going to get it. If you don't have any underlying conditions, and, first we were thinking, hey, only 50% said that they would take the vaccine. Listen, you try wearing a mask. I wore a mask yesterday to take my daughter to get basketball sneakers. She had her first game. She did fantastic, by the way. It was awesome just to see her. I wish I was out there with her. She did fantastic. And we were in the store for like an hour, and my wife, we have, I guess, our personalized masks that we have, and then we just leave the regular ones, 10 or 12 that come in a pack. We leave that in our cars in case we forget. So we took our car, so I forgot mine. It was, it was black, but it had like an inside covering. I couldn't even breathe. I got a headache. I was like, ugh. And I can tell you that 55% of people worried about the vaccine. Again, that was in the middle of the election, and everyone's worried, and everyone's cutting corners, and you're going to die, all that shit. When I look at, the vaccine now, and when it comes to masks, I think people are going to take it like crazy, especially with this 90% plus, 95% plus effective rate. You're going to see a lot of people take it just so that we can go out and get rid of this thing, and fine, we're all cool. But average people are probably not going to get this to at least 9 months from now. When I say average people, I mean people with no underlying conditions and under 70. And, don't work in hospitals and first responders, stuff like that. Now, great news all around, right? Really great news with the vaccines, which if you put alongside the incredible results from Home Depot, Walmart, Target, which I'm going to break down later with Daniel. Shouldn't surprise anyone with these results, since these are companies that were allowed to stay open while everybody else closed, which is kind of amazing. But you're seeing these results. I mean, Target blew them out, Walmart, just amazing. I'm going to break this down a little bit later with Daniel. But those results and the vaccine news pushed the markets to all-time highs. Kind of incredible when you think about it. Because while the market was processing all the positive news, what was really going on? What's the biggest story? Numerous states around the nation have decided to go back on lockdown. They're back on lockdown. I mean, are you kidding me? So you have lockdown restrictions extended in Colorado, New Mexico. New Mexico is the harshest, which is weird. I don't know. Again, I'm doing a lot of research on this. I just was surprised. It's, people were told, hey, you basically have to stay home except for essential travel, indoor and patio dining no longer be allowed. You have California, they're already super tight. Indiana, Illinois, Iowa, Connecticut, Washington, Vermont, New York, just to name a few. There's a lot more. But most of these states, if not all of them, are planning to close schools again. They're planning to close schools again. Now stay with me, because it's going to be about your portfolio. And I'm going to share some data with you. And it's data. So don't hate me if this doesn't support your agenda or way of thinking. It's okay. I mean, you can hate me if you want. If it makes you feel better, frankcurzioresearch.com. Feel free to send me an email. Take it all out on me. I'm here for you. I don't care. People just, for some reason, are very passionate about things because they're listening to source. For me, I always want to look at the data, right? I'm a research analyst for close to 3 decades. My job is to research shit to death. That's what I do. My wife hates me that I do that. Everything I do, that's it. I'm programmed that way. So I want to get down to the data, the answer, and figure it out. And that's what I do with our stock picks and our newsletters. Now, if you listen to this on iTunes, which a lot of you are, it's really cool. But when you go to our Curzio Research YouTube page, all of our podcasts are in video format now. So this is in video format. You can go there. It's absolutely free. You subscribe, like the page. It'd be great. But all of our interviews, we got a fantastic interview coming up, by the way. Going to tease out a little bit. Really, really good interview. But you could look at all of this through our Curzio Research page. And it's important because now I have the ability to bring up certain sites. And I want you to see the actual research that I do. I'm going to explain it if you're on iTunes. You have nothing to worry about. But it's pretty cool to see it because at the end of the day, I want to try to educate you. And this is going to relate to how you can structure your portfolio better. So when they're closing all the states inside the close of schools, right? They're closing schools again in so many different places. I wanted to see some more data from the CDC. Now, I'm going to punch this up really quick. So when you go to the CDC site, and I have that up right now. Again, I'm going to explain it for you iTunes people. You go to the front page, and it's funny because they give you data like age, sex, race, Hispanic origin, all this stuff. And they have good data sources they break out the years, the amount of people out of COVID. It's pretty close to 224,000. Again, this is today. It's updated November 12th. It's updated every week, but this is the latest data. Okay, we're talking about the CDC here. CDC, right? It's important to understand that because the CDC is a site that we should all be able to trust, right? I would think. Unbiased, they're reporting information, one of the leading sources that people grab things from. And that's what we do here. So when you look at the CDC, and get right on it here, which is interesting. So it's kind of hard to find this data, but I want to see broken down by dates between kids under 18 years old, and I want to see their death rates based on states, right? So they have a link here. It says index of available data files. I have to click that first. And then I have to go into provisional COVID-19 deaths by place of death. And when I click that, it brings me up to another page. And it highlights, the data set and visualize export. Now, when I hit export, right, you can export it right into your Excel spreadsheet. Now, this is where things get interesting. When I download it, here is what it looks like. It's just a bunch of data. It shows the data start week is February 1st, 2020 to 11/12/2020, right? That's the latest data available. It's all sexes, age group, 0 to 17 years old. It has all the ages broken down, but I'm selecting 0 to 17 years. Then it has the amount of COVID deaths. It's pretty close to 200 and it's about 224,000 deaths right now. Now, only 115 they have at the top in the United States. Only 115 people who are under the age of 18, right? So 0 to 17 years old, have died from COVID. That amounts to a 0.05% rate. But it gets even better than this, because when I'm looking at this data, it goes by state by state. I go to Alabama. Alabama has 0, right, for males and females under 17 who die from COVID. Alaska, 0. Arizona, 0. Now, let's, I went through every single state already. I won't bore you. California has a 0, even though there's only 2 people, actually. That's what's being reported. 2 people under the age of 18 years old died from COVID in California. There's 40 million people. That's the population of California. 2 people. 2 people died. Did you know that? I didn't know that. Found out this week. Only 2 people. You're closing the schools. We need to close schools. We'll close every single school. It's very, very important. Okay? California, they have 0 here. This is their data. Even though there's 2 that are listed on some websites, but the CDC has 0. I go down. New York has 0. I'm going to heavily populated states. Again, kids that died under 18 who got COVID and died from COVID. The only state I go down to that has anything listed there is, and again, this is their data, is Texas. And when I get all the way down to Texas here, it's basically they're the only state that they have 14 deaths from males and 11 from females, so 25 total in Texas. That's the only number that I'm coming up with that based on their statistics, even though at the beginning it says 117 people. Now, when I look at that, it's kind of interesting because we're looking at the data, right? It's all about the data. And why are they closing schools here? I mean, it's kind of interesting because, like I said, when it comes to California, you have 40 million people. 40 million people that live there. And just 2 kids, which I can't even find on the CDC website, has 0 there that die from COVID. Now, to put that in perspective, there's more people in California that die from bee stings and snake bites every year. Just putting it in perspective. But we're going to close all the schools, which is unbelievable. So we're looking at the data, and despite the data coming out, and this is from psychologists, leading doctors on how lockdowns have caused a spike in suicide rates among children, mental health issues. I mean, data is now showing the catastrophic effects from lockdowns in terms of that depression, anxiety, right? We're seeing that. We're seeing studies come out like crazy. They're everywhere. Now, when I first heard this stat, especially with California, I wanted to dig in and do some more research, right? So it's very easy. This is why I'm showing to you on our YouTube page that you could do this yourself. You can look at all the statistics. They're all there, right? But what you're going to hear is that cases are through the roof. We need to close everything. Hospitalization rates are through the roof. And you know what? They're kind of telling the truth. They're telling the truth. Yes, rates are going up, but you got to look at the data, right? Because I got to bring up something else here. Now, one is, you're seeing hospitalization rates go up. And I'm going to post this right here, and I'm going to show this data and this chart, which is cool. And you look at the percentage of ICU beds with COVID patients, right? And this is a major concern. Hospitalization rates are going higher, right? So if they're going higher and they're skyrocketing, and you would think like ICU, those beds would be filled, right? They're not even near, and I have the chart up here. It's not even near crisis levels, and they break it down by every single state. Not even close. Not even close. Not one state is even close. Not one state is even close. And then when I look at the hospitalization, let's take a look here at COVID hospitalization and fatality rates. Okay? We need to look at rates. It's important, right? That's a percentage. That's what we need to do. We need to look at the percentage. Yes, of course, there's more cases. There's more people going out. We know that this disease impacts sick people, right? Again, I'm going to get to your portfolio in a minute, but here is COVID hospitalization and fatality rates. It's kind of amazing. It's from Evercore, ISI, great research firm, are crashing. So to put in perspective here, you're looking at hospitalization rates are now down to around 3%, a little bit lower. To put that in perspective, it was 6% in August, and it was over 15% in May. It's under 3%, meaning that, yes, there's more people being hospitalized, but as a percentage, it's going down tremendously, which is great news. The fatality rate is under 2%. And you're looking at June at 4%, and you're looking, man, at April over 15%. These two numbers are huge. Nobody wants to report them. I get it. People have an agenda. I get it. I'm not here to say, hey, you're an idiot. You're looking at this. You're looking at that. I'm not saying that. But you need to research a lot of this stuff, because when I look at the data, again, clearly looking at the data, it doesn't make sense. There's nothing that supports that schools should be closed. Nothing. Absolutely nothing. If you look at the common sense of it, where we're locking down the entire country again to fight a disease that has a 99% plus survival rate. When you look at the common sense of it, where massive spikes in suicide, depression, anxiety from lockdowns are creating a much bigger impact on society than COVID. But we look at recent studies from leading journalists, media outlets on both sides of the aisle here, guys. Both sides of the aisle. Donald Luskin, Wall Street Journal, says no escaping the evidence that at minimum heavy lockdowns were no more effective than light ones, and that opening up a lot was no more harmful than opening up a little. So where's the science that would justify the heavy lockdowns many public health officials are still demanding? Right? Lancet, one of the oldest publications in healthcare, they did a study, same thing. So National Bureau of Economic Research, Bloomberg, Elaine He wrote this article, showed there's a little correlation between severity of a nation's restrictions and whether it managed to curb excess fatalities. And they even said that there's tons of these. I mean, look yourself. There's dozens to hundreds of data that has come out showing that lockdowns do not prevent COVID deaths. So the question is, why are we doing it for? The data doesn't suggest it. I just brought up charts that I showed you, which indicated how you're hearing what they're telling you. And they're telling you, yes, it's a fact that hospitalization rates are going higher. It's a fact that more people are dying from COVID. But as a percentage of people infected, they continue to going down. And that's an incredible trend. That's the most important thing. So if the data doesn't suggest lockdowns, common sense doesn't suggest it. Even studies done by the media on both sides, they don't suggest it either. Again, I can't find any clear evidence at all that suggests lockdowns prevent COVID deaths. Why are they doing it? Maybe you could answer that question. I can't answer it. There's a million conspiracy theories. They want more control of us. I have no idea. But if you're looking at the data, if you're looking at common sense, you're looking from both sides. Why are you locking down? More important, why are you closing schools for? Why are you closing schools for? It makes no sense. But in the end, and here's the point here, get into your portfolio, it doesn't matter. It really doesn't matter. Your job as an investor is to react. So if the Fed is spending more money keeping interest rates low, react. You could bitch. You can go on social media. You can say whatever you want. You hate this. Look at the Fed. They're bailing out everybody, especially if you're a perma-bear. You hate it. I hate it. Stocks are going high. I hate it. You've been around a perma-bear before? My dad was a little bit of a perma-bear. Always depressed. I don't know. I never consider perma-bear a perma-bull. I just, again, look at the data and then make my decisions accordingly. But go on social media. Express your feelings. Do whatever you want to do. But adjust your portfolio. Start owning assets. Because when I look at what's going on, we're locking down. Regardless of the stats I just showed you on the CDC site, citing sources that are on both sides of the aisle, it makes zero sense. And even for kids, closing schools is a joke. It's an absolute joke. And again, I have 2 kids, one has Crohn's disease. And I'm still sending her to school. And we're in Florida. They're going to school. They've been there for 4 or 5 months. Everything's great. 4 months, I think. Everything's been great. Playing basketball, playing sports. Yet in New York, everything's been canceled. Friends tell me CYO basketball is canceled. They can't coach. The kids aren't doing anything. Fall schedules going online, 100% online. All this garbage. Why? But I tell you, you have to adjust your portfolio accordingly because this is happening regardless of the data. You're seeing states lock up because everyone's scared shit of the coronavirus again, even though 99% of the people who get it are going to be perfectly fine. Plus, right? It's amazing. Now, this is what has me nervous. Because we spent $6.5 trillion to stimulate the economy, which worked, right? It's 30% of GDP. This is not an apples-to-apples comparison. But $6.5 trillion at 30% should buy us around 4 months of economic growth. Again, not apples-to-apples comparison. Where, you're looking from the economy, from a spending perspective, right? And the 6.5 trillion, I can't believe I say trillion all the time. Trillion, are you kidding me? Trillion, $6.5 trillion, that's awesome. That's so awesome. And we want to forgive debt now, student loan debt. I mean, hey, what about auto loans? Throw that in there. Nobody has debt anymore. Everyone's happy. Hey, it'll be fun. Anyway, $6.5 trillion. It should fuel the economy, and it did. Now, this was passed, the CARES Act, in late March. So like I said, if you put around 4 months on that, 30% of GDP, and in March it didn't hit till April, but 4 months later is August. I'll even give it to September. After that, a lot of that money's dry. We still have some of the fiscal level, I agree, but a lot of it, if you talk to businesses, you talk to people like I do, so many people email in, there are businesses that are doing good. You're looking at, asset-related business, homes, prices still going higher, and home builders, things like that. But a lot of this money's gone. And you look at business outside the Walmarts, Targets, Home Depots, again, stay-at-homes, stocks. Hey, those are still okay, but you're looking at restaurants, gyms, bars. They can't even operate at 80% capacity, which it is on average around the nation. Now you're closing again? Now we're locking down states again? And we still don't have a stimulus pass, which may not happen to the end of the year. Now, hypothetical here, let's say you just woke up from a coma from 1 year ago. And I said to you that, hey, you know what? We're locking down states. And the government's not providing any stimulus. Just on that alone, you would think the stock market's down 20%. And we would see tons and tons of bankruptcies. What do you mean, lockdown? We're locked down. People can't open their business. They can't run their business. No, you can't even go out. You can't travel. You can't go to school and send your kids to school. Nothing. Imagine I said that to you. You think, wow, the market must be getting crushed. No, stocks are trading at all-time highs. And I understand more than anyone that markets are forward-looking. A vaccine's going to eventually wipe out COVID, but it's not going to happen for years. States are still going to require people wear masks for many years, which results in fewer people going to fewer places. It does. Absolutely. I went to Disney a couple weeks ago. I don't feel like going back to Disney. Not at all. My kids didn't even like because I had to wear a mask outside all day. We all had sore throats at the end of the day. It wasn't a great experience. And it was crowded on the rides. 25% open, but everything else was closed. So the only thing you could do is go on rides. And those were 30 to 50-minute wait. Pretty much 45 to hour waits, actually. We didn't get on any rides in 30 minutes. Nobody does. Now, to be clear, I'm not calling for a crash. There's lots of names that I love here. I'm recommending a newsletter. We have great performance, doing very well. But many stocks at extreme valuations. With the S&P trading over 21 times forward earnings, with earnings declining year over year right now, as of last quarter, which is reported. But we're basically pricing in perfection, which could happen. Sometimes perfection happens. Sometimes. Not often. But by perfection, I mean 0 chance of the Democrats winning the 2 Senate elections in Georgia and taking full control. 0 chance. I wouldn't put that at 0. By perfection, I mean the vaccine will result in everyone going back to the way they spent money in the past. I don't know. That's what we're pricing in, though. I mean, by perfection, we're definitely going to get 100% certainty a stimulus plan in the next month or two. I don't know if I can guarantee that right now. I don't know if it'll happen this year. Can you guarantee that we're not going to have any global concerns with China, who infected the world with this virus and killed hundreds of thousands of people? Are you kidding me? Millions of people? Possible conflicts in the Middle East? I mean, there's a lot of things to consider at these levels, so just be careful here. I mean, I'm long, but I do own some puts. I'm not 100% long, more like 70% around. I mean, very, very careful. But for you, when you're looking at your portfolio, everything that's going on, there are a couple of certainties. And central government is going to continue to spend trillions to keep their economies afloat. Again, canceling student debt that's actually on the table. Are you kidding me? That's a great message. That's a great message to send to the schools, which have been increasing tuition at what? 7 to 10x times the rate of inflation? What do you think they're going to do if all this debt gets paid off? Well, they're going to jack it up even more for these kids. And they're going to say, you can't even come to our schools. We're going to do it online. Again, the schools accept no responsibility, which is an effing joke. Joke. It's all the kids. It's all in the system. It's all in there. Everybody blames everybody else. But hey, the schools love this. Hey, more money to us. It's fine. It's great. But when you see that, even over time, maybe the stimulus doesn't happen in the U.S. in the next couple of months, but if you're looking at the next year or two where businesses are still going to be closed for the most part, at least 10, 20%, they're going to need more money to survive. The central government's going to do everything they can to supply that, which is why Bitcoin is at 17,000 plus, almost a new all-time high. Why gold has been strong. Pull back a little bit here and there based on stimulus news, but overall it's been pretty strong. I think it's a great time to add some names to your portfolio. And another industry that I think is going to benefit tremendously during this, especially if there's more lockdowns, is marijuana. Cannabis. You talk about the elections. Yes, there's so much going on with Trump and he's still fighting and all this crap. Yeah, I get it. And there's a lot of emotions, but when you look under the surface, there's a lot of things that happen with marijuana. 5 more states approved legalization methods. And that brings us to today's guest, who may be the biggest name in this space, since he runs the largest cannabis ETF fund in the world with over 700 billion assets. It's called Alternative Harvest, or MJ for short. This is a fund where every single marijuana stock that goes public is dying to go into. That's their goal, to be into this. He's got 33 securities in that portfolio. There's hundreds that want to get in, a lot of great names that came to market. Of course, you're going to see the biggest names go in there. But what does that mean? It means this person has access to the best names in the entire industry, which we're going to hear about in a minute. And that person's name is seasoned veteran manager who runs the MJ fund, is Jason Wilson. And let's get to that interview right now. So Jason, thanks so much for joining us on Wall Street Unplugged.
Thanks for having me today. Great to be here.
Well, you've been doing this a long time, right? I mean, you have senior positions at several leading financial institutions. What attracted you to the cannabis space? And when did you realize that, wow, this is a market that it's not just some kind of little thing, that this is going to grow into something this big?
Yeah, I guess 2 things. Professionally, I've always been interested in emerging markets, emerging industries. Starting as a lawyer, I did a lot of work in the structured finance space, and that took me over to investment banking. And I've always had this interest and curiosity to get into new asset classes and new industries. And it's about in 2014, I moved back from the U.S. back up to Canada, and it was right around then we started seeing a lot of activity on the investment banking side for cannabis cultivators in the medical side, looking to raise capital to expand their operations. And the fact that this wasn't legal at the time in Canada from a recreational perspective, and B, it wasn't legal in most countries around the globe, it was hard to raise capital. So it was an interesting challenge to figure out how to bring some of these companies to market. And then B, just the efficacy behind the product. I mean, listening to company after company, story after story of how medical cannabis was actually helping a number of people, you could really see the total, the huge addressable market and opportunity it would have, and also seeing it in the polls and public opinion, where it was moving from, I'll call it this kind of taboo type product to something that was becoming socially normalized, socially acceptable. So it is just a combination of I guess right time, right place, and I guess I've been in the cannabis industry for 6 or 7 years now, so it's been a pretty great ride.
So you're a veteran, right, in the industry.
Yeah, relative veteran.
So I'm looking at the election, right? Everyone's focused on the candidates, of course, and we hate to get political, but when you kind of, I don't know if it was under the radar, but you had 5 more states approve it. I think it's 15 in total for recreational use. I'm pretty sure. But you mentioned something just now when you said internationally. I think we can all identify with the states, but what about international? Could you talk about the growth internationally? I mean, is that because everyone's the U.S. is the biggest market, but yeah.
Yeah, the U.S. is absolutely the biggest, singular market, and just looking at North America, obviously, already we have full adult use legalization in Canada. Mexico as well, another large country by population, is coming online for full recreational use by the end of this year. And that's been in the works for a while. But going outside of North America, looking to Europe and the rest of the world, there's over 40 countries that have now legalized medical cannabis or in the process of legalizing. And, their total populations represent over 1 billion people. So outside of the US, there's this tremendous movement to legalize. We actually have the United Nations that are going to vote to reschedule cannabis at the end of this year based on the WHO recommendations. And, that'll help open up that global market. So, yeah, to your point, 15 states plus the District of Columbia have legalized adult use. There's another 20 states for medical use as well. That's a big story on its own. And we'll see if we have a divided Congress or not. That will determine the timeline of federal legalization to some extent in the U.S. But one way or the other, we're going to see federal legalization in the U.S. And quite likely in the next few years, we're going to have 40, pushing 50 countries globally that have medical cannabis programs. So it's a tremendous global opportunity as well as just here in North America.
No, that's fantastic. So let's get into your fund a little bit, right? The MJ fund. And I'm going to bring this up for everybody to see. So, and they have the expert on it, which is a nice, beautiful picture of you, which I want to put up because you seem like a modest guy. So I just wanted to throw that up there. But it said, the first U.S. and world's largest ETF to target the global cannabis industry. You have 33 holdings. Here's your assets under management, and you have nice state's approval. And guys, I have the fact sheet here. You can find out everything you want. This is the largest. I guess out of the 33 issues, a number of holdings, could you venture into the international market? Or are you seeing, there's probably hundreds that have come out that just smaller companies, and some of them might be promising, but, how does that work in terms of your allocation? Can you go international if you find the right stocks and outside, I guess, North America?
Yeah, absolutely. In fact, the bulk of the portfolio has international exposure. Yeah, MJ is unique in a number of ways. First off, first publicly traded, exchange-listed fund in the U.S. to focus on the global cannabis market, launched at the end of 2017, and right now we're approximately around 800 million in assets under management. So it's not only the first; it's by far the largest, and it's also unique in the fact where MJ really focuses on the entire cannabis ecosystem. The majority of our holdings are cannabis cultivation companies. They actually grow and manufacture cannabis-related products. But we also have a number of other verticals in the cannabis system. There includes companies that manufacture equipment, provide services. We have, a pharmaceutical biotech component to it. A consumer product side. So if you look at MJ, it's looking at more than just the companies that grow and cultivate cannabis and have dispensaries that sell, adult use or medical cannabis direct to the public, but they also are involved in many other facets of the industry. And then from it's interesting you mentioned do we have international focus? It's in fact fully international. Most of our large holdings have global operations. If you look at companies like Canopy Growth, they're one of the market leaders in Canada, and they have obviously operations in the U.S. initially on the hemp side, but they also have contingent ownership interest in a couple of multi-state operators in the U.S. They have obviously through a distribution partnership, through ownership with Constellation Brands. They're using that to build out their CPG side of things, but they also operate in over a dozen countries globally. So, and we have a number of companies in that bucket. Afria is another good example, where they own a pharmaceutical distribution company in Germany that gives them significant access to the European medical cannabis market over there. So, I would say at least half of our holdings provide that full global exposure. Another significant portion of them are already operating in the U.S. Scott's Miracle-Gro is a good example, and some people will say it's not really a cannabis company, and that's true at heart. It's not. They don't grow cannabis, but they have significant revenues, and their fastest growing segment that they have is the Hawthorne division, which solely focuses on, the growing equipment and things, all the, the canopy lighting and what have you that you need to actually go out there. And for individuals that live in states that want to grow their own cannabis, they can do it, but they also have an institutional industrial R&D program as well. So it's a really, MJ is great where it does provide full global exposure. It also does it in a manner that is touching multiple verticals in the cannabis ecosystem. And it's, the reason why we have so much support, so much investor support, even withstanding, correction we've seen in stock prices going through 2018, 2019 in the cannabis space, up significantly from our lows this year. but we've always been gaining momentum and gathering steam with a lot of new assets coming into the fund.
You mentioned Canopy, and I'm pretty sure that you were an advisor to Canopy. I think during the Constellation investment, right? Constellation Brands, I think it was.
Yeah, well, when I first came back to Canada, the investment bank I was working at, we ended up doing some advisory work. It was for Tweed at the moment, which ultimately became Canopy Growth, and then I left before him, and then they ended up falling all the way through to the Constellation's investment.
So, I mean, just understanding Canopy early on where they are now, and you're looking at, say, the big ones that people talk about. It's Tilray, Aurora, other ones you hear all the time. I know you know a lot of all the names in the industry, but do you see like a changing in the guard? Do you see new technology, maybe innovation coming out? Where are these guys going to be, you think, that the Microsofts and the Amazons, or they, the BlackBerries or the AOLs? Because, as new technology comes along, new systems, supply chains, everything changes, especially in a high growth new industry like this.
Yeah, I think you're already seeing that happening to some extent. Originally, when there was a rush of capital, when we were looking at full adult use legalization in Canada, just there's a splattering of money everywhere, and it was all invested off of narrative, and it was a grow at all costs kind of mentality. So we had a lot of these companies, a lot of the bigger ones, some of them that you mentioned, that they were just building these green meadows. I mean, they were all about trying to get as much growing capacity as possible, on the hope that there would be this massive build out in Canada, that there'd be legalization in the US, and of course legalization globally. But as things happen, legalization in one country takes a fair amount of time. Implementation of legalization takes another fair chunk of time, and we saw that alone in Ontario is Canada's biggest province, with almost 40% of the country's population. And within it, not even in the first year after legalization, we had somewhere in the neighborhood of 25 dispensaries where people could buy legal cannabis. So it took a long time for the regulation framework and supply chain distribution channels to really build out. And we're seeing a significant uptake in sales now, but that wore heavily on a lot of these companies as they burned through their cash. And, you think of it globally too, as well. We have to see trade treaties, be changed and amended to allow a true global market. And then the U.S. ditto down there, even though we'll have state legalization and federal legalization, it'll still take a long time for all the regulations and guidelines to come into place. So that's created a lot of havoc and created some haves and have-nots. There's a lot of companies that raised capital when it was cheap, have significant war chests, have great investment partners, and they are becoming kind of cannabis 2.0 companies, in the fact where they're really CPG companies that focus on cannabis product. Canopy is a great example of that. Free is a great example of it. Kronos and Tilray, they're going that way as well. But we're also seeing other companies grow into the ecosystem that are focusing just on extraction, for example. And there's other ones that are focusing. GW Pharma is a great example, solely on the pharmaceutical side, the medical grade side of things. So there's all these different components that I don't even know. There is this kind of, some of them will be an Amazon of the space, but it's becoming more faceted than that. We're seeing, as the industry develops, we're seeing individual companies that are becoming leaders in their specific vertical, if you will. And that's going to continue to play out for quite a while, which is, again, why we see so many people investing in a multi-strategy ETF, if you will. It gives exposure to that whole cannabis, because it's way too early innings to even try to guess who's going to be, the Google, Microsoft, the Amazon of the industry.
Yeah, it definitely makes sense. And let's talk about the current environment, because, I mean, it's not right to say this, but it feels like it should be a secular industry, but it feels like it's kind of cyclical, to the point where even, you look at 2016, the election, just before they run up and then it comes down. Then we had just, 2018 midterm elections. You had more states. I think it was 3 different states that approved some form of legalization. Now you have 5 states. Now just before the election started moving up again. Is it more about, more states getting approval? Is this just something, or is this, because for me, it seems like a secular trend, but also it seems like there's these companies all have to go through, just like what the technology companies went through during a tech boom, right? They just get crazy with their growth trends. They use their stock as currency to buy as many companies as they can. I get it, right? Rolling up and stuff. But now it's come to the point where I'm reading a lot of stories that the majors have a ton of inventory levels, which is going to mean lower prices, which is great for people who like this product, but not so great for margins. What are some of your concerns, or are you even concerned about that in the short term for the industry?
Yeah, I mean, short term, there's a lot of pressure on exactly what you said. If you look at Canada, Canada's an open market. It started as a limited license market on the health side, where the Health Canada was only issuing so many licenses, and that really allowed a lot of these early companies to come in and scale with, I'll call it, margin protection. But as we move to full national recreational use, it's really become an open market, and there's a number of cultivation licenses out there. It's a lot easier to open dispensaries now, and based on that, we're seeing more competition. And because we had such a rush of capital coming in the door several years ago, and so much growing capacity was built out, we do have this oversupply. So in the short term, am I worried about that? It's obviously it's hitting the balance sheets of these companies clearly. But in the long term, that's going to sort itself out and everything will normalize. We'll end up getting to this point where the strongest companies survive, and we'll have this equilibrium in the open market. In the U.S., you've seen a very similar thing. We haven't seen federal legalization, as you know, in the U.S., but state by state, some states like California have a model similar to Canada, and it's hard to compete there. Again, open market, lots of competition. And high excise taxes as well. And in contrast to some of the limited license markets, we're like how we had in Canada initially, these kind of protected margins. We're seeing some of those multi-state operators actually do quite well. The problem is all of this is subject to change. I mean, I don't know and I don't think anyone does, what U.S. federal legalization is going to look like. Today certain models work, but looking forward, depending on what the federal guidelines look like, whatever your model is could be completely turned upside down. And that's why we're seeing a lot of the ebb and flow in prices. We see companies, they come in, they're doing well, and then there's some changes, and the next thing you know, they fall out of favor. So some early stage companies that were managed well from the get-go and didn't overspend have continued to do well. Some of those companies, though, where they did overspend and don't have robust distribution networks, are falling by the wayside. We have new companies coming in that are learning off of that, and there's going to be a lot of M&A opportunity. At the end of the day, it's a new and emerging industry. There's no institutional support with respect to stock prices yet, so we can see these somewhat emotional flows of cash come in and out, because in large part it's still largely retail buying and selling with respect to cannabis stocks. Less so on the global cannabis companies like Canopy, but definitely when we look at some of the U.S. names, I mean, it's primarily supported by retail trading.
Yeah, you bring up a good point with the institutions getting in, where it's not on legalized on the federal level, which is a little weird, right? I mean, because federal trumps states here, but it's not going to happen. Like, they could come in and seize a business in Colorado or anything, but the fact that that's open, I could see institutions being like, a little law. And one of the other things that you mentioned, which is really interesting, I never thought about it, is how easy it is to start a business like this once it gets approved in the state, right? Because if you have a technology company, you really have to know a ton about technology. It's not the easiest barrier of entry, and even when you look at oil, the industry, there's some kind of technicals there where once this thing goes live, it's hard to have the established players, where there's so many little players and local players out there. That makes a lot of sense, though, in this industry. But another thing you mentioned was some of the names that you said that had done a great job in terms of, they don't have high inventory. They've been smart with their costs and everything. Is there any names that you could share with us that you really like? And if you can't, that's perfectly fine. I understand. But names outside the mainstream that you're looking at that, wow, these guys are really getting it done. They got a good management team and looks promising.
Yeah, I mean, generally, if you look at the big global cannabis players, there's Canopy is kind of the bellwether. I mean, they have significant institutional ownership in them through Constellation. That's a big plus for them. That's going to be incredibly important, I think, as they turn themselves into a global CPG brand. If you think of it takes, as you mentioned, on its face, it's kind of easy to grow cannabis. It's a little bit less easy to grow and cultivate in a single state and sell it through state licensed dispensaries. But if you really want to scale this business, you have to do what Canopy's doing. And they're looking at, the derivative products, so drinkables, edibles. On the medical side, at the end of the day, most physicians will not want to prescribe dry leaf. They're actually going to want to prescribe a specific, call it a gel cap or a pill that has a specific cannabinoid profile that's relevant to a particular ailment. So that takes a whole different skill set. And that's what we like about companies like Canopy Growth, is they have that strong management team, that institutional support to be able to take advantage of those opportunities on not just a continental basis, but on a global basis. Freya is another one that is an interesting company. They kind of, started in your more traditional format where it was a group of people that were very, adept in the agricultural space. But from there, management's fully changed over. They did some questionable acquisitions back in the heydays. But, with Irwin Simon at the helm, he's been there initially as chairman, but now he's the CEO. Bringing, again, that CPG experience. They have a very well-run company, strong balance sheet. And again, they are a CPG company first with a cannabis focus. And you can see that with their recent acquisition of Sweetwater. And you look at the valuation of a company like Freya, they're only trading, their enterprise value to sales is just around 3 times. So, very reasonable multiple, trading just above book. It looks like a pretty interesting entry point for a company that has true global exposure to the cannabis industry. So there's a number of companies like that in MJ that have that. GW Pharma is another interesting one. I mean, the fact that they have the only plant-based cannabinoid drug that's approved by the FDA. So there's, again, early times, lot to come out, but there are some definite strong companies that have been doing this for a while with strong balance sheets and good management that look poised to take advantage of the next 10 to 20 years of global growth in the industry.
Yeah, and let's talk about that. Where do you see, because I talked about short term, and you're always going to have bumps, right, in the road in every single industry, no matter where you are. It's just, that's the way it is, especially if it's a high growth industry. You're going to make lots of mistakes. And these guys, I feel like, have learned a lot. Where do you see this industry in 5 to 10 years? Do you see it even in the U.S. approved on a federal level? I could see it exposure internationally. But yeah, I would think that you'd have to be pretty optimistic, right?
Yeah, I mean, 5 years. I mean, there's so much bipartisan support right now. And if you think of a post-COVID economy, where what we've really had is, a number of things: significant job losses, massive hits to state and local budgets. And, you got the legal cannabis industry is one of the fastest growing, or if not the fastest growing industry for jobs in the U.S. There's this impetus to say, let's legalize, because it's going to make it safer and more efficient to operate for these companies that are already, in legal states. 2, it's going to give the opportunity for more job growth. 3, a lot of tax revenues, right? All these things right now, they're incredibly important to come out of the COVID-19 pandemic. So I think that's going to, whether you're red or blue, it doesn't matter, and you add to that the medical efficacy. I mean, we're seeing really deep red states that are approving programs now for that simple reason. They want access to medical cannabis. So I think there's a lot of reasons economically to do it. There's also a great opportunity for social justice reform to allow this new industry to grow and to actually bring in minority business enterprises as well. So I think that regardless of whether you're a Democrat or a Republican, it's going to happen in one way, shape, or form. Mm-hmm. The only question is, I mean, if we end up with the Dems, controlling Congress as well, it'll be easier in shorter term. But even if it's not, even if we have a divided Congress, it's still going to happen. And then globally, same story. I mean, every country is fighting against massive budgets right now, figuring how to get people productive and employed again. And this is a great opportunity for everyone to get together and make that happen. So, that just legalization on its own won't be the end of it. Obviously, we'll have to see proper guidelines, regulatory reform. We saw hemp legalized in 2018, but with conflicting guidelines from the FDA, the DEA, and the USDA, it's still that industry still hasn't emerged. So even once legalization occurs, it will take time to fully adopt and grow a full industry. But we're going to be tremendously further ahead 5 years from now than where we are today. There are lots of upside, no doubt.
Nah, that's great. I was going to say, if you need an analyst to do boots on the ground, sample some of this stuff for you, let you know if it's any good, let me know. I'm sure you have analysts lined up out the door, right? But I want to end on this, and this is really cool. So, and hopefully I'm not going to embarrass you because this is kind of amazing. But I did read, because I always do a lot of research before I interview everyone, a lot of it, and it says that prior to completing your university studies, Jason was a member of the Canadian Forces and is a recipient of the Gulf of Kuwait Medal awarded for his engagement in direct combat during the Gulf War in 1991. That's really, really cool. So when I saw that, congratulations on that.
Thank you.
Really cool. No, Thanks. That's awesome. I love getting to the personal side of people too, right? I mean, it's all business sometimes, but that's really cool to know that background. But listen, I want to thank you for coming on. We put this interview together pretty quickly. Thank you so much for being flexible. I know how busy you are.
No problem. Thanks for having me.
No worries. And if you need anything on my end, please don't hesitate to ask. And good luck with your fund. And I'm sure it's going to draw a lot of attention even from this interview because a lot of people are definitely interested in this trend.
Thanks very much. Well, I hope to catch up soon.
All right, you got it. Take care. All right, guys, great stuff from Jason. I mean, just an awesome guy. I was able to speak to him a few days before, and we discussed topics and everything, but just a straight shooter, someone that I respect a lot. And I want to thank John Petrides, who I'm going to get back on this podcast, who made an introduction to someone in the space, who made that introduction to Jason, again, who's one of the largest players in the space and a big name. And I really appreciate these are the names that are coming on thanks to you guys. I mean, our downloads keep increasing, and now that we're doing it on our Curzio Research YouTube page, again, feel free to go there. It's absolutely for free. It's just really cool because, there's a lot of visuals there, and you get to see my ugly face along with the ugly face of the person I'm bringing on right now, who is my buddy, Daniel Creech, where we're going to talk about some of the topics, not just vaccine news, Bitcoin, Target, Walmart, Home Depot, but a lot of things on the table right now we want to get to. But Daniel, what's going on, man? How's everything?
Frank, happy Wednesday, sir. How are you?
Well, I want to start off by saying Daniel, his back, he had back problems. And when I say back problem, he couldn't even get off the floor, right? It was really bad. And I've been through this. I had 2 back surgeries, so I know what he's going through. So I'm like, helping him out, getting him a coffee, doing everything I have to do. And
hilarious.
And he's kind of like, bitching a little bit, and I'm making fun of you, right?
Oh, yeah.
And it's funny because Daniel's, how tall are you?
About 6'6".
6'6", and you hear his voice, deep voice, and he's like, my back hurts. So it's kind of funny when you hear, but.
Man, and I know it starts out like this because, it's like getting in trouble at school and, you got to explain to your dad and be like, listen, I was sitting there minding my own business. Okay. And then all of a sudden, every story sounds like that. But how crazy it was and how out of the blue it came is that, and I'm active, I exercise and do stuff like that. I went to bed Thursday night thinking, man, the weather's going to be beautiful Friday. It's supposed to be really nice down here, and it has been the last few days. And I complain about the weather here. The weather sucks here for the most part if you move from anywhere else nice. Unless you're up north, it's great here. But I literally went to bed thinking, man, maybe we'll sneak out and play golf, in the afternoon. Woke up, felt like somebody took a few vertebrae out of my spine and did. So thank you to Frank for getting coffee. And he's really a nice guy at heart, folks.
Don't ruin it for me. Don't ruin it for me. But, it's funny because I did.
Yeah, I'm back and moving now, so I can sit up a little bit. I'm pretty uncomfortable, but we're heading the right direction. So
yeah, and definitely. And I could identify with that because even when I asked the doctor, I said, you know what, I not that I'm some tough guy, but I'm like, I usually okay with pain. And I was like on the floor, like almost crying with my back pain. And he said, you better, if you got shot, you'd feel less pain. So I understand. I was telling him, I was like, Daniel, it's bad. Don't do anything stupid. It's not something that you just go crazy and try to stretch it out all the time. You try to, but anyway, I'm glad that it's getting better. And I'm glad you're able to come on because now we're going to talk about a couple of topics. Let's talk about the amazing results, right? Target, Walmart, Home Depot. All 3 of these we put in our portfolios, placed for Curzio Research Advisory. We sold Home Depot a little bit early for a nice profit. We still have Target and Walmart in it. But talk about, these results are insane, right?
Yeah, you just try to fathom. It was $20-some billion in quarter, and just stop and think about billions are thrown around all the time. So that's easy to just sit there and read through, and especially on our jobs. It's like, okay, did they beat? Did they raise? What are they saying? But I don't know if you talked about it in your intro, but it's hilarious when you're allowed to stay open no matter what. Talk about having a heads up on the competition. And they're staples. You need them. Target is impressive just because, and Walmart too. But Target just has a nicer feel. The logistics, the efficiency that goes on behind those companies, the management teams, they're so good and so regular, I guess, that you take it for granted. But they talked. The big news that I got was $4.5 billion in stock repurchases. They're probably going to start next year. So it's not like these stocks aren't performing well. It's not like they're near 52-week, not near 52-week highs. And so that shows you the momentum they have that's kind of here to stay.
And it's amazing, Dan, because when I look at these companies that they were allowed, deemed essential to stay open, but mom and pop, a lot of these organizations were not. Even Amazon, and Amazon we've had in our portfolio for a while, up over 200% on it. But just if you're looking at Amazon, you're looking at Walmart, you're looking at Target. For people who never shopped there before, they were forced to shop there, and especially online, where online it seems like it's a higher number, but I think it's like 13% of all retail sales are online. Only 13%, might be more now. I think I looked about 4 months ago. But what does that do? Well, you go to Amazon and you realize, wow, holy cow, this thing's amazing, right? You're being forced on it, and now you're forced on it and going like, wow, I don't even have to leave my house. I can just have free shipping, become a Prime member, automatically sent to my house, towels, paper towels, toilet paper, whatever you need. And once they kind of grab hold of you, especially with all the algorithms and everything like that, they're going to know what you want. They're going to give you discounts. And, I went to Home Depot to get a vanity for my bathroom. And it was amazing. I've been going to Home Depot forever, but just going there, the girl's like, hey, you know what? If you fill out a card, you can get $75 off the purchase, $300. It's nice. The sink and vanity is pretty cool for a bathroom. And I was like, wow. I said, I think we already, have a card. They're like, no, you can have up to 5. But she did everything she can. She gave us $75 off. But the point is that experience, they understand Amazon, Target, Walmart, Home Depot. They understand you're getting new people in there. Treat them great. Give them everything, because now they're going to be customers for life. And this is a new audience where you're increasing your total addressable market. It's no surprise. But what does that do for everybody else? Because when things do start opening, and some have opened, you're not really seeing that demand, right? From a lot of these businesses. It seems like a lot of mom and pop stores are going to wind up going out of business.
Yeah, well, hopefully that's one good story about customer service. Very rarely those aren't the norm anymore. So it's good when you run into somebody like that. Yeah, I think everybody's going to have to pick up slack and operate where they can. I think if you don't kind of cater to those new customers and give as good of an experience, people are going to lose. That's old-fashioned capitalism. But again, if you're a mom and pop store and you kind of had to shut down, or you don't have the resources and stuff like that, you can get into the unfair argument. But that's the reality. And the management teams wouldn't be, I think Target's looking at raising their dividend or staying on pace to, and buying back shares if they didn't see this momentum continuing into the future. So, vaccine or no vaccine, Walmart and Targets are pretty damn good bets. And they're boring, so they're good to have in your portfolio and be like, oh, guess what? We're up 30, 20%, whatever we are. It's not a worrisome thing. If the market's down 10%, you're not panicking that you own Target. No,
it's a good point. And you mentioned vaccines. We saw the news come out, 94 to 95% effective from Pfizer and BioNTech and Moderna. Those two vaccines, fantastic news, right? I mean, this is great news all around.
Yeah,
it's
absolutely.
Not going to happen all of a sudden. Let me ask you, are you going to take the vaccine when it comes out?
No. Next question.
So you're not going to take it?
No, I'm nervous about all that. But I come from the attitude of, I try to avoid all that in general. With the data did you talk about any data and deaths in your intro? Did you piss everybody off?
I broke it down. Hopefully I didn't bore everyone to death, but I was amazed because, before this podcast, real quick, Dan, I do as it's, I close my door all day. I'm doing research. I try to make it as relevant as possible up to the date. So we tape these things on Wednesday and we get this out on Wednesday. We have a great crew that tapes it, that puts everything out there on video now and also on iTunes. And I just went crazy with data today because I was just surprised. I was just surprised that you're closing schools. And I said, let me really look at the data. And even the data didn't even show, other than Texas, of kids under 18 that are dying from COVID. But I did share that data.
And again, I don't want anybody to get it. I don't wish anything on anybody. But for me, when you keep looking at data and the death rates and if you're at risk or not, and how this is handled to kind of everything else with the vaccine race and from flus to sicknesses to diseases and all that, it really makes me skeptical. So it's not that I don't believe all the data. I don't think anybody's lying about the 95% or whatever effectiveness or all that's over my head. But to the extent of when I dumb it down to think, hey, if I'm not in the risk zone, other than my back right now, I'm a pretty healthy guy. And, so no, I would avoid that. But I wanted to get it in the hands of the people that are genuinely fearful of leaving their house, because it breaks my heart that you have older people that are lonely and have been lonely for months. I've had some family issues. I've been to Ohio several times this year. I couldn't imagine going and not seeing my older grandparents and, people, you're putting them at risk. Now they're fine. But, I feel for them. You hear of friends and stuff that are in homes or whatever that haven't had human contact with anybody. That's heartbreaking. So anything that we can get back to more normal, I'm for. But no, I'm not going to be lining up to take that thing.
So then let me ask you this question. If you're not lining up to take it and there's a lot of people that aren't, and I get it. Like if I wasn't going to take it, but the fact is I really don't want to.
Yeah, but you're getting old, Frank. No.
Listen, I hate wearing masks. I really do. I just, the fact that you have to wear a mask when you're not sick is just mind boggling to me. I get it. I'm going to wear it because I understand there's people, it's going to make them feel safe, even though seriously, guys, someone who does the data, there's no real studies out showing that masks work. If they worked, you wouldn't see massive spreads in Europe, which we're seeing right now, because they mandated it. It wasn't like here where you're like, F it, I gotta wear a mask.
Yeah.
No, you go to jail. You get in trouble.
You got to take it with some salt. But I've seen some videos on Twitter, and I know that they can be doctrines. But yeah, people are getting the hell beat out of them or arrested for not wearing that stuff.
Yeah.
Like out of Subway and things. Like, damn.
Yeah, no, it's crazy. So I guess even if when I look at it that way, I'm like, yeah, you know what? I'm probably going to take it. So, and I changed my mind. I wasn't going to take it. I suggested if you're under 35, or even under 40 and have no underlying conditions, which is most people and not me, then, then fine, do what you got to do. But, you don't really have to take it. But you wouldn't take it even after 6 months if, say, I took it, I'm like, hey, everything's cool because now, I don't have to wear, well, hopefully.
Yeah, I mean, it's hard to look in the future. Possibly, if it's like anything else, I would have to know either people or be close to, one person away from other people. There's still some skepticism around how it works and all that kind of stuff. The worst thing is somebody gets it and then catches it and heaven forbid gets really sick. Talk about doubting the whole damn thing.
Yeah, I know.
But yeah, I'm sure that's par for the course and all that kind of stuff. But yeah, I mean, I'm sure I would kind of soften up to it eventually. But as long as the good data points, and I know that, one death is too many, and I don't mean to make light of that, but as long as the death rate and other stuff like that, along with, forget the vaccine for a moment, even though that's excellent, there's no reason to believe that treatment isn't going to continue to get even better as well. Exactly. So heaven forbid if you do get it, hopefully we're getting to the point and, tomorrow will be better than today and next month and this month we'll have more better treatment, we'll be more efficient and all that. I mean, we have the greatest frontline people around and, that's more of a calling than anything to do that job. So hats off to all you, but, I have a ton of confidence in all that. So, but yeah, until I get more in the risk or the data changes, I'll leave the vaccine to others that are more at risk, and hopefully that gets out quickly. And like I said, we can get back to normal.
Yeah, and good point on that too, because I brought up earlier, we were separating these videos of on YouTube and stuff like that. But I brought up earlier how hospitalization rates are crashing. Rates, not people who are going to the hospital. The rate, the average person, out of everyone who has COVID, and also fatality rates. And I could show that, once again too, how they're crashing. This is as of 2 days ago, right? So, I mean, you're looking at the percent of hospitalization rate is now down to 3% of the amount of people have COVID. It was in August, it was 6% and over 16% in April. And same with death rate, where it's down below 2%, right? So the fatality rate, which was, in April above 14%, which is crazy. So, that's evidence that suggests, hey, the medicine's working. Plus, we're keeping these people who at most risk safe, which is great, right? So we're all doing a good job on that front. Now, the last thing I want to talk to you about, and one of these topics, which is kind of amazing, right? We've been saying this for a very, very long time. Again, I'm not touting my horn or anything, but it just, the environment made perfect sense for Bitcoin to go much, much higher. And now we're seeing that right now. To me, Daniel, I think things are different compared to 2017. Guys, if you're out there listening to this, I have a lot of crypto people. We have a crypto newsletter. Our performance is fantastic in it. And because I have great contacts. For those of you who are diehards in the industry, I would love to see stats. I could research it myself, but again, I'm busy these days. If you can, help me out. Where the percentage of people who own it, or even the Google statistics that are looking, searching for it, because I remember those statistics in 2017, and it was used as like a buying point. Well, only 2% of people even understand what Bitcoin even is. I think that number is exploded now. It's everywhere. Even cab drivers are talking about Bitcoin. And to me, that makes me think that this trend is probably very early in its infancy, not just digital securities, but when you look at it as a whole, where what's going on with central governments and more spending, right? I mean, this is one of the options that makes a lot of sense.
Yeah, bring me back to Bitcoin, because I have to joke real quickly about the Fed news. So yesterday, Judy Shelton was an informal advisor to Trump or whatever. She didn't pass the vote in the Senate to be on the Fed board, I believe. And the only reason that's worth news and kind of funny is because a couple Republicans, Mitt Romney and the senator out of Maine who run weirdly, Susan, I think. were going against her, so they weren't sticking to party lines. A couple of the independents. But the big thing here is that they scared everybody because Judy Shelton in the past had been a fan of the gold standard, returning to the gold standard, had totally different thoughts on inflation, kind of like, if you're really trying to help the poorest people in the world, why would you try to increase prices every year? Common sense stuff like that. And I mean, the people are throwing fits and it's hilarious. The funny thing is that the reason I bring that up with Bitcoin is because a lot of times, and I got to give them credit, both Jamie Dimon and Ray Dalio, banker for JP Morgan Chase and Bridgewater hedge fund manager. Have you seen any recent comments they talked about?
A lot of them, a lot of hedge fund managers. Yeah,
so
that up.
Ray went on Twitter recently, I don't know if it was yesterday or day before, and said, hey, I might be getting this Bitcoin thing wrong. I'd love it to get explained. He threw out his points. Hey, here's why I don't like, and people are going to respond and all that. At least he's open-minded. I know Jamie Dimon was speaking yesterday or today at something and was saying, hey, it's just still not my cup of tea. But you got to give them credit for not hiding and kind of going out there and admitting they could be wrong because it's going to, 18,000 right now?
It's not his cup of tea, but yet they're totally involved. JP Morgan's totally
on the blockchain too, yeah. And he said that again today. You got to give him credit. He says, hey, I think the blockchain is going to really help move money around the world. It's going to be huge for institutions and different money things. So you got to give him that credit. The reason I'm explaining the Fed in the scary person of Judy Shelton and the gold standard is because Bitcoin to me has never been that hard to understand if the concept of a limited amount, the 21 million, proves to be correct. And as long as that still does, I don't see why it's a big grasp to get a higher price on something that's limited, because people as humans, you value scarcity. That's why gold still holds value, et cetera, et cetera. So it reminded me of a funny conversation in 2017. It was damn near 20,000 then. And a guy in Ohio said, hey, man, I just bought a little bit of Bitcoin. What do you think? And I said, well, I have no idea what it's going to do, but I said, just forget about it. Well, as it went down to 5,000 and 4,000, who knows what he did? I haven't talked to him or, asked him, but it'd be interesting because now it's damn near right back to it. Talk about your emotions changing and say, oh, well, maybe I wasn't that silly back then or whatever. But yeah, I think with the government doing its thing, both Ray Dalio and Jamie Dimon actually hint at governments making it illegal or further restriction, which, Frank, when governments outlaw something, everything goes away, right? Drugs, prostitutes, you stop all your bad habits, and everything loses its value. If pot is illegal, pot's worthless. Nobody's going to pay for it ever again. These people.
I love that because when it comes to even with COVID, I think it was April and May, they had the strip bars. So they weren't allowed to go indoors, but they had them almost like
somebody did a
drive-throughs where they had these spaces available. And when it comes to sex and drugs, they're always gonna find a way, no matter what.
I wish I could remember what state did that.
Yeah, we're all bad people when it comes to that. We're all terrible. Drugs are bad, sex is bad, all this stuff, right? So it's kind of.
But I think it's great how they highlight, and I appreciate Dalio for saying, hey, I think they're just going to basically governments would make it illegal, or I think Diamond was saying how the regulation could be more strict. We'll get into this in another time, but that's a bigger point because why would you make something illegal that all people are trying to do is efficiency, cheaper, and transparency? So that's a rabbit trail for another time. But it's easy to say now that Bitcoin, is approaching near its previous all-time highs. But yeah, I mean, it still makes sense, and you're seeing a lot more money and news around it. So hell, but now it's all of a sudden back to 60,000 and then 100,000 Bitcoin. And didn't you highlight the city guy? Didn't he put a 318,000 by like the end of next year?
You know what? When it comes to
think about that,
it kind of pisses me off because the guy was basically, this is on technicals, which how are you using technicals when you never broke, right? 20, 21,000, whatever. Why are you using technicals for at that level? Not only that, you're citing a fundamental reason for gold with the gold standard in the 70s. And why gold took off, but it's a guy that wants to get his name in the paper, and it pisses me off because we're into digital assets as well. We have a security token, CEO, Curzio equity owners token, and I believe in this industry. Not all those utility garbage tokens, but I do believe in digital assets. And then when I see guys like this come out with stupid targets, it makes, to me, it's a negative because people are skeptical about the industry as well. Like you could say 35,000, 50,000, same thing. But it's from Citigroup. So go crazy. This way we get all his attention. And to me, it's, I just get pissed off at things. We heard $1 million targets in 2017, 18, and look what happened. But, it's just, and he thinks that's going to happen next year, by the way.
I know. I think it was December of 2021.
2021, next year.
Yeah.
How crazy is that?
Hey, that'd be nice. Anybody that owns Bitcoin is a fan of that.
Yeah. And I'm sure he'll, he'll say, well, I got it right if it's at
Yeah.
30,000. Right? He's going to be like, I told
Yeah.
you it was going high.
Hey, it's higher.
Say 300,000.
Last thing I do want to say on that, because we have seen, I put it in the token tracker email, but there's been a couple of companies that have bought Bitcoin to kind of use as basically their treasury, which is interesting to me.
Awesome.
And then Zero Hedge had, and I'll butcher his name, so I'm not even going to say it, but apparently the Mexico's third richest man, who's worth 11 or 12 billion, put 10% of his in Bitcoin, of his net worth. Now, you still are rich even if that goes to zero, but that's a big deal. So
no, that is. All right. So we covered a lot of topics there. And guys, questions, comments, feel free to email frank@curziresearch.com. Daniel, I want to thank you for coming on. I love having you on. We get a lot of positive feedback. Love discussing these topics with you.
We're getting some good negative ones too. I like that.
Yeah, keep
it's good to be
ones.
on. The show must go on. Look how much pain we're working through here.
We're gonna work on the negative ones. So stop bitching about your pain. You'll be fine. 6'6", man. Give me a break. Anyway, listen, thanks so much for joining us. And guys, last time he'd be sure to go to our Curzio Research YouTube page. Hit the subscribe button so you never miss another podcast video. We're separating them, we had this whole studio set up. I'm really proud of it because it was a lot of work and a lot of people helped me out on it. And to have this now is really, really cool, just to bring you the websites and things that, believe me, it's going to help you become a better investor. I promise. That's why we're doing all this stuff. And it's a little bit better visually than just listening to it sometimes because I do like to watch podcasts, actually. I enjoy that. So you can do that by going to our Curzio Research YouTube page. Again, hit the subscribe button, like it. Don't like it, whatever you want to do. But these videos are there, and you're going to have some really good information and good visuals when you go there. And guys, listen, thanks so much for listening. We continue to get tons of downloads. I'm always humbled by that. You guys, let me into your lives and just really, really cool stuff. Again, I don't expect you to always agree with me or whatever, but I'm always a straight shooter, and I'm going to do everything I can to make as much money as possible. And so far in our newsletters, we've been doing pretty well. Could always do much, much better. Always do better. But I'm very happy with the performances and all the newsletters and everything, and really appreciate all the support. So thank you so much. And I'll see you guys in 7 days. Take care.